The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the day like we usually do with the DAX index. And as you can see here, we are in a uptrend. We're making a small ABCD pattern as we speak here. We'll see how much it's going to continue on to the upside. We see pretty much the same thing when we look at the FTSE too. If we take a look at the FTSE, you'll see over the last couple of days, we've had a pretty good rally in this area. And we want to watch that. Now, we have a guest today at 9:30. It's going to be our friend Stan Harley from the Stan Harley Stock Market Letter, always ranked way up there in the Timer Digest ranking. So we'll enjoy him. He has some really good cycle stuff. In fact, it's about as good as you can get. And then, of course, on Wednesday, we'll have Stormin' Norman Nixon from the Astro Trend out of Naples, Florida. So those will be our two guests this week, and later on I'm hoping to get Tim Boast, but so far have not been able to set up a time. Anyway, what we'll do now is we will take a look at the overall market. Folks, this is my perception of what's happening. I just want to give you a bird's eye view here. This is what we've done here over the past 7-8 years. You'll notice that we've had these corrections in here. You'll be able to see here that these corrections that we've had, starting back after the bottom in 2009, there was a 16% correction, a 19%, a 12%, a 13%, and then just recently we made a 10% correction. And since we're almost back to new highs, we have to assume that is a major correction. So should we go below that, that would be a very, very negative connotation for the market, but it certainly hasn't done that yet. It has a great deal of power. Now, is what we'll do here. Hold on one second, folks. Give me a second here. Give me 1 second so I can get this darn thing up here to see it. Shucks. Yeah, I'm going to have to put this one up. This is the one from yesterday. I'll have to update this mentally for you because I just don't have time to put it up here. This is the New York Stock Exchange. Shucks, hold on. Technical stuff drives me nuts. This is the New York Stock Exchange chart from yesterday, right near the close when I was doing Tom O'Brien's show. We were almost exactly at the 61% retracement. We hit it spot on the close on the New York Stock Exchange Index at 13,031. That's where it closed, and so we are right there. If it has any strength at all this morning, is most probably going to go higher. Now, we've already exceeded the 78% level in the NASDAQ composite. We had talked about that. That's one of the things that we're looking at. Now, we do have this full moon coming in here on March 1st, and so, by the way, there's only 21 more days till spring, folks. So those of you that are in the coldness of the east, be patient. It's coming. The warmer weather is coming. Colder weather is coming here to Tucson because we're expecting snow here on the mountains tomorrow. So that'll be that always looks nice because it makes Tucson look like Switzerland when we look at some of these things. Folks, one of the things that people ask me all the time that is extremely important is that if you're trading a short-term chart like a 30-minute chart, you shouldn't go to a daily chart or a weekly chart and get some inference out of that, because you should trade the chart that you're on. That's really the one that you really want to be watching. That's, because for two reasons. One, the risk on the 30-minute chart is going to be a whole lot less than it's going to be on the daily. We know that for a fact, for sure. So let's watch that. Now, we've got a market that we're watching very, very closely each day, and that is the gold market. Let's just take a quick look at what happened yesterday. Get this up here. We still think we got a really good chance to get down here to this little below 1300 in the gold. You'll notice yesterday we made a really nice ABCD pattern, just a hair's breadth from the 50% level. We've broken down today about $10 from that level. Actually, we're down a little bit more than that. We're down $20 from that level, and that sets up a potential for an ABCD pattern taking us down, as you can see, to that $1,300 per ounce level, and the 1.27 expansion of that last swing comes in around the 1296. So that's the main thing that you keep an eye on, because that could be a really major problem. As I mentioned yesterday, the trade that looks the absolute best to me in the coming months is the silver trade, and I got my big start in silver. That's how I got started. Well, I was doing a little bit and some other things, but silver was the big one for me. Let's just get this up here. Of course, it was trading at $1.28. Hold on here. You'll notice that this ABCD pattern that we have here at $15.10 per ounce would be a very interesting one. Would be taking out the lows of last year. It's also a beautiful 61% retracement on the long-term weekly chart, so we really need to watch this one closely if we get down to that level. It appears that it wants to go there, but appearances can sometimes be deceiving, but it's got a pretty good chance if we can get to that level. Folks, when the silver was back in this was going back in the 1965, 66 when we first started looking at this. When I was in graduate school, the price of silver was trading for about $1.28, and we had silver coins that were in circulation. These silver coins, 1964 and under, the pre-64 coins, actually pre-65, were 90% silver, and they were worth more as silver than they were as coins. So if you saved those, you made a good return. Well, what happened was, of course, when silver got to 250, 350, 450, these silver certificates that were out there became much more valuable, and that's how I made my my first big hit in the markets, was that silver trade that I've talked to many times there, but that's a long time. We'll take it. Danny's asking us a question about Treasury bonds. I really like the Treasury bonds, folks, from the short side, but let's just look at them here. They've got a chance here. If you'll notice this pattern that I'm going to post this morning, this is over the last couple of weeks, and you'll notice that yesterday's high, the high on actually it was the 26th, I'm sorry, was a 382 retracement of the high we made last 3.5 weeks ago. It was also a 61% retracement from the high back on the 7th, and it was a 78% high from the high on the 13th. And now we pull back, so I'm looking for a potential pullback here to around the 143 and a half, 143.15 level, to see if it'll hold that 61% retracement, and then we could get a rally. The bonds have a possibility of rallying to 148. And why do I say that? Because the whole world is bearish these things right now, and that's usually when you get your first rally. So let's pay attention to that. Stay tuned, and then at the break we're going to have Stan Harley, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted the chart of the NASDAQ in here, and as you can see, we gapped up yesterday substantially and closed right near the high. We're almost at a new high in the NASDAQ composite. That's a very, very bullish thing. If you're watching this one, the New York Stock Exchange Index is certainly a lot different, but this has a tremendous potential here, because if we can close into new high ground, we could be looking at an ABCD structure here that would take it, oh my goodness, probably another 1,000 points higher without any trouble at all. So just keep in mind that there's a potential for that happening. Now, whether it does or not remains to be seen, because when you're looking at this composite, you're basically looking at about 30 stocks that control just about all of it, much like what we have in the Dow Jones. So that's why I look at that New York Stock Exchange Index as a gauge of what the overall market has looked like. And this is right up at the 61% retracement. So you would be looking for a place to sell this the stock market today. The E-mini S&P probably around the 2788 level, with about an 8-point stop is what I would be possibly looking at here, because we are over these really strong cycles that looks like they've been pulling them up. And so we'll see if that's going to happen. Let's get back to the bonds for a second, because evidently I didn't answer the question like I thought I was going to. But if you'll notice here, just give me a second. I want to get the longer term T-bond chart out here. This is the main thing that I think it's important, because we had a major 1.27 expansion occur last week. That was down at that 142 and change level. We're trading at 144 and change. This is where I see the potential for a 382 rally coming up here around the 148 level. Now, we've rallied 2 points very, very quickly. The question is, are we going to be able to make this or not? But if we got to that level, that would be one of the best entries into a market that you could possibly ask for, because you're looking at a market that is incredibly bearish, and it would be equaling the same rally that we had between July and August when we made the third drive to the top up there at that 157 level. So that's why it's so important to watch this level around 148 in the bonds. I'm frankly long bonds. I think we're going to get to that level, so I put on a very small position on that pullback, and we'll see if this is going to hold. I'm in a risk-free situation now because the market's moved about, one handle in my favor, and so I don't want to give any of that back. So I raise my stop to just a little above break even so that I'm guaranteed a profit, and then I go on looking at something else. I'm not looking at this bond chart, folks, because the monitor is not your friend. I've said this 1,000 times on this show. The monitor is your mortal enemy. As you look at it, it's a reflection of all the flaws that you have in your personality, the lack of patience, greed, fear of missing out, fear of getting stopped out. All those things will be focused on as you watch the charts go up and down, and nobody really cares whether you're watching or not. So it's okay to be long bonds, but if you are, go look at something else. Go look at the natural gas contract, or wheat, or corn, or apple, anything other than what you're in, just to get your mind off of it, because your mind will play tricks on you, and you'll see the market run up $600 and it backs off $500, and you say, oh no, look, you can't think that way. You just basically have to keep your trading plan in place and just try to execute it. Otherwise, you're going to drive yourself nuts, and these markets can take you there very quickly, and you're not driving in a Rolls Royce when you get to those times in your market. You're going to be absolutely worn out, and you're not going to be able to execute when you really should, and that is the worst sin of all, is that the market has worn you out and you don't have any more energy to trade it. Even though you have the capital, you just don't have the energy to trade it. So try not to watch the monitor. And the only way you can break yourself away from it, folks, is by baby steps. First of all, if you're watching the monitor all the time, and what I would mean by watching the monitor, the thing that you're trading, like if you're in the S&P and you're watching that all the time, that's a no-no. So switch over and look at something else. Look at corn. It'll put you to sleep, but it'll be trading, and you don't have to think about what's going on with the S&P because nobody really cares. You can have your limit minder in to tell you when your profit has been hit or your stop loss has been triggered, but other than that, don't even try to think about it, because it's really a negative thing. Mark Douglas proved this to me many years ago, going back to the Chicago days, and I try to do that, but I look at other things. Once I put something on, I'll move on to do other things, or watch another market. Natural gas has my interest in here because I think we're at a major bottom. I want to see how it completes these tests that we're looking at here, and that'll be something that'll be interesting to see. But it's got a potential for something really big to happen in the natural gas contract. So I'm not watching that as I'm watching the bonds, even though that's where the position is. As far as the stock market today, I would try to be looking at a top in here, and as I mentioned, the area of around 2788, which would be a 1.27 of these past 6 hours that we've had, 8 hours from the previous close, and the German market moving. So that would be a new high, and at a 1.27 level, the whole world would be wanting to buy it, and you'd be selling it with a 5-point stop, and that's the only thing you can control is the amount of money that you have at risk. You don't have any control over anything else, so you've got to be able to realize that this business of speculation is not about how much money you make, it's how much money you don't lose. Remember Warren Buffett's 2 favorite rules. Rule number 1, don't lose money. Rule number 2, don't violate rule number 1. And if you do that, keep your losses small, you'll be far better off, to see if these markets are going to turn when you think you are. And it's okay to try to pick a top. There's nothing wrong with that, or to pick a bottom, but just if it doesn't work, you got to stand aside. You just can't stand there and get killed. Look what happened to natural gas. We rallied up to well over $3, and then in a matter of a few days, we were trading down below the 260 level. So those are monster moves, and you can't stand in front of those things. So you have to have a game plan, and your game plan should be, how much money do I risk when I put this trade on? Because that's the only thing you can control in the risk-reward equation, is the amount of risk that you have. So keep that, keep that close to your vest. That's a very important thing. Getting back to that natural gas, I want to put this up here for a second just to show you the potential here. You'll notice we haven't moved very much. We're trading around 265. The low was 253 and change. But that was a 61% retracement on the long-term weekly chart, and it's got a potential here to really do something big. You'll notice that back in 2013, we got to about 250% of where we are right now, up around that 6.4 cubic feet. And then, we're at around like 266. So there's a long way to move here. Even just an ABCD pattern will double to 468, and that's a big number, because that's over a $20,000 move, and it could happen within a 3 or 4 week period like it has in the past. So those are the main things that we want to be looking at. If you have any questions for Stan Harley, he'll be on next. So live every day in an attitude of gratitude, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, and we have Stan Harley of the Stan Harley Stock Market Letter on the line. Stan, are you there?
Good morning, Larry. I'm doing well.
Good morning to you, my friend. And we have a question from one of our listeners, and that is, how is Stan Harley handling this volatility that we're seeing?
Well, Larry, when you and I last spoke back on the 1st of February, I told you then I thought we had topped out on January 26th, and we outlined a number of the technical reasons, everything from Fibonacci counts to cycles. And to me, everything pointed to a market that was going to take a brief drop. I thought we would bottom in the vicinity of Valentine's Day. And the low actually occurred, as you know, on the 9th of February. And we've been up since then. What the market did, I just want to digress for just a minute. The market underwent what I would call a bout of extreme right translation. That is, in market cycles, the lows tend to occur at roughly the same length. They don't tend to expand and contract all that much. Not that they don't expand and contract, but as a general rule, troughs tend to occur at regularly recurring bases. But the highs, the crests of the cycle, tend to expand and contract. And in a bull market, the crest of the cycle tends to occur to the right of the midpoint, and that's what we call right translation. Mm-hmm. And in a bear market environment, the same low-to-low cyclical schedule is retained, but the crest, or the high point of the cycle, tends to occur to the left of the midpoint, and that's called left translation. Well, sometimes in a bull market, the crest occurs well to the right. Normally, the crest occurs in about the 2/3 to 3/4 point in a cycle, but sometimes it occurs very, very close to the trough. And when that happens, it's called extreme right translation, and we tend to get a short but very sharp sell-off. And it typically forms a V-bottom. The market quickly recovers. And one interesting phenomenon with extreme right translation is the follow-on cycle always takes out the crest of the prior cycle. So what am I saying? We had a high on January 26th in this 35-week intermediate cycle series, a very quick, short, and sharp low on February the 9th. And that structure is what I would call extreme right translation. And now we're off to the races again. We formed a V-bottom, and I think we will go to new highs. Not right away, probably sometime in April, but the trend from my technical spyglass here says this market is going higher.
Well, it certainly has exhibited a lot of strength. There's no question about it. To see it come back after being down 1,600 points and then, take it all back in just a matter of a few days is certainly a sign of, tremendous power. Stan, when you were on last time, everybody remembered your call about the 26 because it was, I believe you were looking at your cycle highs that came in, and they were very close to the lunar cycle, and we've got this full moon coming in this week. Do you see anything this week that looks like would be lining up with one of your key trading days?
Nothing. No, I don't, Larry. Nothing really of importance. We've pushed up above the 0.618 retracement level of the range. Broke out above that just a day or two so ago. I think we'll probably do some chop shop right in here, maybe some sideways, but I don't really see anything on the daily charts of significance until about March 9th. So I think we're going to grind modestly higher from here into about March 9th, and we're going to get some kind of a pullback. Ultimately, we're going to break out of the range, but as I said earlier, I don't think that's going to happen until April.
Stan, on your speak, when you were talking about the right translation, that was right out of the Hearst book. Am I correct?
I don't know whether Hearst. I'm not.
Yeah, he talked about that quite a bit.
I'm not sure Hearst. Did he? I don't recall.
Yes.
Well, maybe he did. Yeah.
Yeah, okay. That's where I learned it. But maybe Mr. Dewey from the Foundation for the Study of Cycles also did work on it. But as I recall, I could be wrong, but and I'm wrong a lot. So I'll double check that. But I thought that it was in there, but I'm not sure. Peter Leides has done a great deal of work with the high translation, left translation, but he couldn't have described it any better than you did. That was a perfect description of it. And so it's a good, it still works. So we need to watch that very closely. Can we talk a little bit about your 64-day trading cycle that you have in your letter this week?
Oh, absolutely. Larry, as you know, and you're a cycles analyst like I am, cycles come and go. They last for a while, and then they seem to go away. They have a beginning point, which I call the genesis point. So that if you and I take a look at a chart and we try to trace the inception of a market cycle, you will see a point on the chart to the left of which the cycle simply doesn't exist. And I think too many people, when they start down the road of examining market cycles, don't understand this. They try to make the data fit a large chart, and it doesn't. Cycles have a beginning point and they have a terminal point. They have a finite lifespan. For example, back in the 90s and early 2000s, the dominant intermediate cycle averaged 78 weeks. That's about 377 trading days, and that cycle was you could set your watch by it, but it ceased to operate in 2010. Now we have a component of that. It's related by the square root of 5. It averages about 35 weeks, and that seems to be the dominant cycle now in the intermediate charts. On the daily charts, there seems to be a cycle that averages about 64 trading days, plus or minus, maybe plus or minus about 10, 12 days on that. But I've noted that there tends to be a recurring pattern of 64 trading days on the daily chart. The last incidence of that, of course, was the February 9th low. And if you add 64 days plus or minus, that's roughly 3 months. That will tell us where we should anticipate the next important low of significance.
Mm-hmm. Okay, now the next question that someone is asking, and it's a pretty good question. If you were to start out wanting to learn about cycles, what would be the one book that you would start out with, or where would you start if you wanted to start to learn to know what Stan Harley learns? I know you got 50 years to learn it, but what would be your first step, Stan?
That's a good question. I got exposed, like you did, to the Foundation for the Study of Cycles many years ago. They had just a tremendous library that I devoured. But a really good primer, something that you mentioned as we started talking here this morning, was a book called The Profit Magic of Stock Transaction Timing by J.M. Hurst.
I keep that book on my desk.
Yeah, it's an excellent book written in 1968. Hurst was, he was quite innovative in his day. He had access to some mainframe computer time, which was something that was very hard to come by back in those days. No PCs, of course, did not exist. And he described cycles. He employed graphical techniques, which he called envelope mapping. But if one could find that book, that would be an excellent, excellent primer.
Stan, we're going to take a little break. Could you be back with us in just a few minutes?
Absolutely.
Okay, Stan Harley, the Stan Harley Stock Market Cycles, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back. We're talking with Stan Harley. And Stan, I keep that book on my desk, The Profit Magic of Stock Transaction Timing by Hearst. And I don't know if you know this, but Jim Hearst was one of my customers when I was at Drexel. And I got to know him. And when he retired up to Grass Valley in Nevada City after being an engineer, I got to speak with him a few times. And I set him up with Ed Dobson at Traders Press to do his, long-term cycle work. It's a $600 course that covers all of this kind of stuff. The only way you'd find it now is on eBay because, Ed sold everything out many years ago to retire to full-time trading. But getting back to this, you are absolutely correct that high translation is not in the Hearst book. The only thing I can think of, because I was so involved with it, it might have been in the Cyclotech material that Ray Frechette did, after, he convinced Hearst to bring this out commercially. But I'd have to go back and check. It's, we're talking 50 years, Stan, I have a hard time remember what happened, what I had yesterday, let alone 50 years ago.
Larry, my first exposure to writing translation, I believe, came from Walter Brezard. Who,
yes, there you go. He lived here. Who I think is who doesn't get credit enough in this industry for what he provided to the technical analysis business. Walter was a great man. Sadly, he passed away a few years ago. His son Jerome is kind of carrying the flag. Walter was just a great man, heck of a nice gentleman, and he did some phenomenal cycles research. And unfortunately, I don't think the man gets the credit that he deserves. No, he really should. I've got a lot of his material. The reason why I live in Tucson is largely because of Walt Bressard. I used to come over here and visit he and Teresa, back in the early 80s. And Jerome was just a kid then. I think he was 7, 8 years old, and they lived out on that little ranchette out near on the road to Mount Lemmon. And I remember, coming here. And then when I moved from California, I said, I think I'm going to go back to Tucson because I always liked the desert and the mountains and the the beautiful weather. So that's one of the main reasons I'm here, is because of we were very, very good friends. And he passed away about 3 years ago in Las Vegas. The last 4 years of his life, he was suffering from Alzheimer's, and he just basically that's what took his life. But he doesn't get the credit that he deserves. He really did do a great deal of cycle work and a real class act. There's no question about it.
Another man who's done some very good work is Ray Merriman, who I believe you also know.
Oh, sure. Betcha.
Ray's done some very good cycles work. He puts an Astro spin on it, but he too has done just a phenomenal amount of research in this area.
I'd like to mention one other guy, Stan, that has done a great deal of work, and not only that, but he puts his mouth where his research is, and he's done an incredible job. And that man's name is Stan Harley, and you should really no, Stan. I'm telling you like it is. When I tell the folks that you're having you as a guest, they're all, the tote board lights up. There's a lot of smiley faces. So you've done a fabulous job. And I'll tell you, to be real honest with you, would you rather me lie, or you want me to be real honest? Anyway, you keep it simple. I mean, you're doing some simple day counts, and you're showing them how you do it to folks, and that's the best thing. There's no, there's no astrology here. You're looking at really good counts, and you're looking at some Fibonacci retracements and expansions and stuff. But it's quite simple, but it does work. But you've got to do the work to prove it to yourself that it works.
Well, thank you for your.
No, I'm serious.
Thank
I
you.
mean, anybody. Well, there. I can see. I see the comments in the room right now. Yes, 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 yes. So I know of what I speak. So we enjoy having you on here, and I certainly enjoy chatting with you. Let's take a quick look at the world indices here for just a little bit, if we could, Stan, because we're seeing a big difference in across the pond than we are here in the U.S. Do you want to comment about that a little bit?
Yeah, absolutely, Larry, and that's a very good point to raise. All of us should look at the world indices, in particular the European indices. What I refer to as the big three are the FTSE in the United Kingdom, the DAX in Germany, and the CAC 40 in France. An interesting phenomenon that I've noted over time, Larry, is that at important pivotal highs, as a general rule, the European indices tend to top out ahead of our markets some period of time. If you look at the most recent high that we had in late January, well, the FTSE, which is probably among the three the most important to watch, topped out a couple of weeks ahead of ours. Sometimes it could be a couple of weeks, sometimes it could be a couple of months. It varies, but as a general statement, the European markets, in particular the UK FTSE, tend to top out ahead of ours. Now, on the flip side, the converse is not true. So, as a general rule, the European indices and the American indices tend to bottom altogether within a day or two. So while that rule works very, very well at looking for market highs, it doesn't work so well at looking for market lows. Nevertheless, we've got a technical divergence tool that we should keep in our hip pocket. Right now, all the European indices bottomed in early Feb, just like ours, and have been powering higher.
They certainly have. We have a question from one of our listeners, and that is, you do some work in the Treasury bond market. Am I correct?
I do. Yes, I do.
Okay. Do you want to talk a little bit about what you're seeing in the Treasury bonds?
Bonds have broken down a bit, taken out their lows from about a year ago. But having said that, I think from a technical perspective, there's a reason to be bullish here. I've got on a long-term weekly chart some very interesting Fibonacci ratios that line up with the present time frame. Wow. And I also look at the companion stock index, the ETF, the TLT, which is my vehicle of choice in trading the bonds on the stock side of the house. The TLT, of course, mirrors the 20-year, but it's a blend of the 30 and the 10. And I look, as any technician does, I look for divergences. And what I see here, Larry, is the bond market has broken down, but the TLT has not. It's pretty well flatlined. And a divergence is always worth paying attention to. And that, to me, is a bullish divergence.
Well, not only that, but you're looking at the largest futures contract that we trade, because that's that's much bigger than the S&P or any of the indices, that Treasury
Yes.
bond and Treasury note. And when you see a divergence like that, I think that certainly makes sense. I think that we're in for a pretty good rally here in bonds. Whether we will get it or not, I'm not sure, but I agree with you that long term it's a little bit scary, but boy, we should get one heck of a rally in here, and it could be a real doozy because the whole world is short this now, and we came off 2 points very, very quickly. So that might be another sign that a little bit more is coming. So we'll take a quick look at it. Listen, I want to thank you for being our guest today, and we'll have you on again soon. I hope to get up there to Phoenix to see you one of these days, very, very soon, because I'd like to, see you again after all these years. I haven't changed a bit, Stan. I'm still looked exactly like Mel Gibson, and you'll recognize me right away.
Slim and trim as always, yes.
Well, yeah, pretty much. Hey, listen, thanks for being on the show, buddy. We really appreciate it, and we'll have you on again in a few weeks if you don't mind.
My pleasure. Look forward to it.
You bet. Stan Harley, the Stan Harley Stock Market Cycles, folks. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we enjoyed having Stan Harley as our guest today. Tomorrow we'll be talking to Norm Winsky of Astro Trend. Always a great show, and he's going to have some really good cycle stuff coming in with this full moon that we have this week. Also, I did want to remember the fact that we did hit the 61% retracement on this rally back in the New York Stock Exchange Index. We went above it, of course, in the S&P and shattered it in the composite, the NASDAQ composite. But the New York Stock Exchange Index, the biggest of them all, stopped exactly where it should have. And that means this market still has a bearish tone until we can close sharply above that. The 400-point move that we had in the Dow Jones enabled the New York Stock Exchange Index to get to that level. And with no follow-through today, it makes us wonder that we could be looking at something that could be very, very interesting. So we will have Norm on the show tomorrow, and then next week I'm hoping to have a couple of new guests as our guest, Peter Leides from Stock Market Cycles, and then also Tim Boast, a very famous financial astrologer out of Florida also. So keep an eye on the crude oil, folks. There's a possibility that we could be making a major retracement level here on this crude oil up at this $64 a barrel level, and it might be a really good short. But the main one to watch is the silver, because if we can get silver down to that 15.10 level per ounce, that's going to be mother, God, and country, widows and orphans time, because that'll be a pattern of all patterns. That'll be the kind that, there'll be so many things coming together, you just absolutely won't believe it. But by the same token, it'll be so bearish that nobody will want to be buying it. But if it happens, it should be a good one. But if not, just wait till something else. There's always another train. As they say in the nursery rhymes, you have to kiss a lot of frogs to find a princess, and keep your lips puckered. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!